Welcome, Becky Sims, to the Money RX for CRNAs podcast.
Thanks, Brett. Super happy to be here.
Well, we're excited to have you. As you and I were just talking offline, we met at the AANA, I think it's called Region 3 conference in Chicago a couple weeks ago. You and I were both exhibitors. And why I wanted to meet you and reach out to you and invite you to do this is, obviously when it comes to money, there's nothing quite as complex and emotional as homeownership. That being your world, I thought I'd love to kick things off and hear about, you and what made you decide to become in the world of mortgage lending, and how did you get there? And I'd love to start from there.
Sure. So I started in 1994, and it was really kind of fell into it just after college, started my first job, and it was more on the operations side of mortgage lending, and really just kind of fell in love with it and learned underwriting side of it. And then about maybe 15, 16 years ago, went into the sales side, which I think is a little more fun. I know it's a little more fun. It's fun and exciting to help people buy, their first house, especially their second house, their dream house, their last house, whatever house they want. But it's fun. I find a lot of joy and satisfaction in helping people make the right choices, I think are the right choices for buying probably the biggest purchase of their lives, right?
Sure.
So,
And so you've been at this for a good, almost 30 plus years. I bet it's changed a lot since, I'm 53. I remember the first house we bought, I think the mortgage rate, the interest rate was 9%.
sure.
And then, back in the 2007s, I think, or just after that, we got down to 2%. What have you learned over that time span about the mortgage business?
Well, rates don't matter that much, I think. They're temporary.
Yeah, interesting. Yeah. Everybody thinks rates. So that's such an interesting point.
They do. But I think because long-term buying a home is a great investment. It's better than renting.
Yeah.
So regardless of what the rates are, I think you're still better off owning a home than renting a home. I don't think we're ever going to see post-COVID rates again, the 3%, typically 5.5%, 6% is a healthy market. We're almost there, 6.5% right now. I think people currently don't even blink an eye what rates are. It was shocking at first. I jumped up so quickly, but now everybody just accepts where they are.
Yeah. Interesting. So over that time span, obviously you like the industry, you like the business. What about it? What do you love most about the mortgage process? What keeps you passionate about it for so long?
The excitement of people buying their first house. They're so excited about it. It's a big deal. It's a big accomplishment to buy a house. So the excitement of that and the joy that they find, it's so fun to walk beside somebody to do that.
So you mentioned their first home. Do you get a lot of repeat customers, or is it mostly, I don't know if you could break it out, is 20% repeat and the rest all first time home buyers?
I do have a lot of repeat customers. And right now, the market is about 40% first time home buyers. So 40%. There's a lot of first time home buyers now, which hopefully they'll, stick with me for their next house. I do have a lot of repeat clients. I try, part of what is so fun is building relationships with these people. It's not transactional. I want to hear about, your kids and drew you to this house and why you love it, why you want to live there. And so there becomes a friendship with people and that they feel comfortable texting me on the weekend, which is totally acceptable. Like I want to be that person that they go to when they have a mortgage question. They come back to me a year later and ask about their escrow account. Like I want people to feel comfortable to be able to do that. They're, to reach out to me anytime. I want to partner with them in their mortgage and homeowner journeys.
And tell me about the credit union that you work with.
So I've worked at Lake Michigan Credit Union. We've been around since 1933. We are the biggest credit union in Michigan, biggest lending credit union in Michigan. We have, I think, about 500,000 members right now, looking to get to 1 million in the next 5 years. We are big in West Michigan, growing in Southeast Michigan. We have about 70 branches total, 50 in Michigan, and then about 20 in Florida. We have so many members that are snowbirds, right? So they are out of here in the winter. So it's an opportunity to grow in Florida as well. So that's helped a lot too. It's I love working here. I will retire from here. We are very community focused and give back a lot to our community, which really aligns with my values too. I mean, they're great to the community. They're great to their employees. We do offer a lot of benefits for our members outside of our mortgage programs. We have 3%, pay back 3% on our max checking. Lots of good reasons to bank with us. And everybody here is just so incredibly kind and nice to work with.
How big is the team that you work with, I guess, on the mortgage side?
My team is 3 people, me and the officer, my assistant. Yeah. We have about 80 loan officers, mortgage loan officers within the company.
Okay.
Yeah. So, and we do a lot of mortgages. In the county that I'm in, we do about 25% of our mortgages. Which is where home office is, which, to put that in perspective, our next closest competitor is at 5%. So we do really dominate the mortgage space here because we have so many great products. Being a credit union, you know this, we're nonprofit, so all of our profits go back to our members, which allows us to have better interest rates, lower closing costs, on not just mortgages, but auto and all kinds of stuff.
So to build off that, like you were just saying, you have a lot of clients, I would imagine, and you work with all different variety, but you and I met at a CRNA conference. So tell me about that. Tell me about your connection to CRNAs. Why were you there? I'd love to hear about your physician loan program specifically.
That's a specialty program that we have. So it's for physicians, and we happen to include nurse anesthetists in our program. So they're able to buy a home with no money down and no PMI. And for PMI is private mortgage insurance. For people that don't know that, it's typically required on every loan that you have less than 20% down. That insurance is a risk-based premium that essentially insures the lender in the event that you default. So we waive that on our physician loans, and we don't include student loans when we're calculating debt to income ratios. And we allow them to buy a house, like I said, no money down, assuming it's their primary residence. It can't be an investment.
Okay.
So it has to be a primary resident. And we look at that, these kids, they work so hard to become nurse anesthetists. They haven't really, worked in 3 years. So you're coming out of school with probably some debt and not a ton of money. So it's a great opportunity for them to be able to buy a home. They come out with great incomes. We really only just need their contract. They don't even have to have started yet. As long as they're under contract for employment, they can use that as qualifying income to purchase.
Okay. So, wow, that's great. So just to play that back, where most instances say we have to put 20% down for a traditional mortgage, under this program, they would not have to put that down payment down. And if they have student loans, you're not going to count that against them from an income limitation standpoint. Right. Wow, that's really powerful. Yeah. What have you experienced from working with CRNAs or the healthcare professionals in general about going through their mindset or their readiness for homeownership?
They are very excited about it. I spend a lot of time with students at that conference and at schools, and they're just really excited and blown away that they can do that. It's been a really great opportunity for both of us to get them into a house right out of school. And a lot of times, they're moving, they graduate, and they have a contract, a couple hours away. They need to buy a house, and they want to get settled in before they start work. So it's nice that we have the ability to let them purchase before they start so they can get settled and then start their.
And we were talking about the entrepreneur, which we'll talk about more in a second, maybe the 1099 side, but it doesn't matter if the CRNA is 1099 or W-2?
It doesn't matter much. So if you're new to the, typically when you're 1099, you would consider self-employed. We want a 2-year history. So we will go with a 1-year history. We'd like to see 1 year of tax returns typically and a history of being a CRNA. So I would say if you're just coming out of school and going straight to 1099, we're going to want to see at least a year. But if you've had a history of working a W-2 position and then switched to 1099, we can definitely work through that. And I've done loans like that. Those contracts are pretty specific. Even when you are 1099, what the expectation is for income. So we're definitely flexible on it.
Yeah. So working with CRNAs, again, we met at that AANA symposium. Is this new for you, or have you been doing this with CRNAs for a very long time?
So I've been doing it for about 2 years, and I will tell you a backstory to this. So I had my family in Ohio. It's a weekend land in Michigan and all our contiguous states in Florida. And so my very best friend for my entire life was my cousin Lisa, and her husband's job took them to, and unfortunately she was diagnosed with ALS in 20. And so that's not a long, prognosis. So I thought, how I need to go and spend a lot of time with her as much as I can in Ohio. But I also need to work. So what am I going to do in Ohio to set myself apart and work on mortgages there? And I have some friends that are physicians there. And so I was talking with our physician loan, and I said, hey, we include nurse anesthetists in our program. Does anybody here do that? And one of my friends is an anesthesiologist. He said, no. He said, that's what you need to do. So I joined the association in Ohio, started doing conferences there, and started working in Ohio. And I thought, well, why aren't I doing this in Michigan? And so then I started.
Right.
So that really that's where the idea came from, is just that need to work and be away from Michigan. And it's really been great. It's been great. I mean, to meet all of the students and the existing CRNAs. They're also friendly, intelligent, well-qualified, easy loans to do, to be honest. So it's been a win-win.
Why wouldn't every CRNA come to you for their first home?
That's a great question. They should. They should come to me.
I mean, I'm kind of bummed. I'm not a CRNA at the moment. That sounds so. I mean, that's such a big lift that they don't have to do with the down payment. So it makes complete sense.
And it's been popular not only with students, but the other time I see a lot of this is people relocating, right? So they're coming from a different state. They want to buy a house here before they sell their other house. And so this allows them to do that. And then they can sell their home, their other home. And if they're walking away with equity, they can apply it to their new mortgage if they want to. They have the opportunity to re-amortize the payment with us if they want to. We don't make them refinance to do that. Or they can invest the money, whatever they want to do. But so I do see it a lot with students and a lot with people relocating. It's a helpful tool.
Okay. So thinking about that new CRNA that may be just graduating or thinking about buying their first home, what financial advice would you give them considering buying their first home in today's market overall?
Sure. So I would say, the advice I give everybody, mortgage guidelines, I think, allow you to buy more than you should. I am conservative. That's just how I'm conservative with it. I don't, so right now, you can go up to 45% of your gross monthly income can be your output. So if you make $10,000 a month, your output can be $4,500. And when I say output, it's auto loan, not student loans in this program, credit cards, and on a new mortgage payment. We're not looking at insurance and cell phones and groceries and things like that. 45% of your gross income to be spending does not leave you with any disposable.
No, it doesn't.
So I say to people, should you? Especially on your first house. So I think like 25%, especially at a CRNA salary, is plenty to buy a house. So that's really the biggest piece of advice I give people is don't fall in love with this house. I know it's easy to do, but you're not ever going to be able to travel or go out to eat or,
Right.
I be cautious of that.
Yeah.
And then I encourage them to work with a realtor and really educate themselves on the market and just start looking at houses and neighborhoods and really know, because it is still, inventory is still low here. So it's still competitive, really competitive. So, you need to make quick decisions, unfortunately, sometimes on the biggest purchase of your life. So as much education as you can do time really makes those decisions quicker and easier.
Yeah, you're talking about quick decisions. How long would you, all things being equal, how long is the total process?
I say on average 30 days typically a little quicker. I mean, there's a lot of moving parts that I don't have control over, like the appraisal, things like inspections, things like that. But I would say plan on 30 days. That is the industry expectation.
And could you say again, what documents might a CRNA approaching you, what documents would you require of them?
Sure. So we would look for a photo ID if they're not, their contract, if they haven't started yet. If they have started, we ask for a pay stub and a W-2 or last year's return. If they're just using their contract to qualify, they're purchasing right out of school, we do ask for either transcripts or their diploma in lieu of a 2-year work history. And then bank statements to document, what they need for not the down payment, but there are closing costs and setting up escrow account. So there are costs involved in that. The buyer's paying them. Sometimes they negotiate the seller to pay them. But if they're bringing money to closing, we have to document the source.
Okay, makes sense. And are these, Becky, traditional mortgages, whether they're 30-year, 15-year, are they interest only? What type of product are we talking?
So I'm going to explain two different things. So they are portfolio loans for us, which means they stay on our books. They don't meet Fannie and Freddie guidelines.
Perfect. Gotcha.
So regardless, LMCU services all of our mortgages. It doesn't matter what kind of loan you do with us. So that is a very nice feature that your loan is not going to get transferred anywhere. You'll always make your payment to us, which if you've ever had your mortgage transferred around the country, it can be cumbersome. So it is a portfolio loan for LMCU. Now, that being said, we don't love 30-year fixed on our portfolio. Okay. So no banks do. So we do them. The rate is higher. So you're like, do I want to do that? So most of them go with a 7-year ARM. So that means the 7-year adjustable rate mortgage, which means it's amortized over 30 years, but the rate is fixed for the first 7. So year 8, they can adjust once a year, relatively pretty much where market rates are going to be. With the idea of where rates are right now, you're likely going to refinance in 7 years anyway. Mm-hmm. Are you going to live in that house for 7 years? But the rate difference is great enough between the ARM and the 30-year fix that you're saving enough to justify a refinance within 7 years. Without any prepayment penalty for that, you can pay extra anytime. There's no penalty for that either. Or you can do a 15-year fix, just depending on your loan size and, payment size.
Okay. And just to clarify, just because we were talking Michigan and credit union, just sometimes those people get confused. They can still work with you. If somebody lives in Florida is moving to Connecticut, they could still do a mortgage through you?
So we can't lend in Connecticut. We can lend in Michigan.
That's a bad example.
Yeah. Michigan, Florida, and then our contiguous states to Michigan.
Contiguous states to Michigan. Okay.
Yeah.
That makes sense.
Ohio, Indiana, Wisconsin, Illinois.
Okay. That's good to know. Awesome.
And the trade, to tell you about this program too, is banks want deposits, right? So the trade-off for this program is we want you to bank. If you're in our footprint, if you're in Michigan, we ask that you have to direct deposit at least 2 times the mortgage payment. But, people are happy to do that. You do a max checking and you get 3%. Nobody pays 3% their checking accounts, right? So that's not a hard sell.
Yeah.
If you're outside of our footprint, we don't require it. So if you're in Ohio, Indiana, they wouldn't require it.
Okay. Makes sense. And talk about the difference between a W-2 CRNA coming to get a mortgage versus a 1099 CRNA. Would the process be different?
Not really. It's just different paperwork. So we ask for tax returns versus W-2s, and we're going to use the net income on those tax returns. In my experience, they are writing off some expenses, but not enough that they're in a low income or a negative situation, Schedule C. So it really hasn't been an issue because, they're good earners, but not a ton of expenses.
Yeah.
So same process, just different paperwork.
Okay. And what other advice, or are there any misconceptions that people have about mortgages that you've learned over the years?
Oh boy, misconception. The common questions are, is there a prepayment penalty? I get that because they're always like, what percentage? So there's no prepayment penalties. We don't do any interest only. first mortgages. I don't know why anybody would do that, but I think that the faster you pay off your mortgage, the better. I think one thing that is shocking to people is just how quickly you can pay that mortgage off and making extra principal payments. So anytime you have extra money, just throwing it your mortgage, it does make a big difference over the life of the loan. And also comparing a 30 to a 15-year payment, I think if you're under, a $500,000 loan amount, it's not that big of a difference. I mean, it's a difference for sure. But when you compare those numbers, I think if you're comfortable with a 15-year, you definitely do it.
Yep.
The faster you can mortgage off, the better.
It reminded me, assuming income matches and we qualify, are there different limitations in terms to the amount that one could borrow, a quote unquote jumbo mortgage versus a normal? There are different stipulations with the physician loan program?
So right now in our physician loan program, it's 0 down up to 1.25 million.
1.25.
Yeah. So if you're buying at, one, and I say this because there's exceptions to everything. So, for an example, I had somebody buy over that, but they were relocating, they had a house to sell, they were going to take that equity and apply it to the mortgage so that loan amount was temporary, right? So in those instances, we just go to credit committee and say, hey, this is why I'm doing this. And if as long as it makes, I get a yes.
Yeah.
Yeah. So there's some flexibility, but if you're at 2 million or something, we're going to ask for some skin in the game for so much.
Gotcha. Yeah, absolutely. Yeah. Absolutely. That's big. Switch gears a little bit back to you. So what's a typical week look like for you?
Typical week. So I usually get into the office about 9. Some days I work from, I mean, COVID's made that so socially acceptable, right? I sit in a real estate office. I don't sit in a banking branch. So I come to the office, I don't know, probably 3 days a week. It's different depending on what I have going on. Sometimes I'm, this week I was at the university talking to the CRNA students. Some weeks I'm teaching new realtors on mortgage ins and outs and do's and don'ts.
For you.
And then, trying to get what my kids have going on. I have a lot of flexibility, which is really great. But I also, like last night, I worked until 10:30 because I wanted to get things done and I want to get back to people quickly. And I have conversations with people after hours. I had a Zoom call with somebody in Korea. That's a big time difference. So it's nice to be so flexible because then I can be flexible for my client because I understand, especially CRNAs. You can't call me from the OR. Like, I understand that you have to talk to me after 5. It's 100% acceptable. And they're a little more relaxed. You can have, you talk private information you don't want to be talking about in a cubicle or, so the job is wonderful in the way that it gives me so much flexibility.
Right. That's great. And I think Michigan might have had that meeting we met may have been their de facto annual meeting, but are there any upcoming meetings you will attend, whether it's the contiguous states for Michigan for the AANA?
Yeah, so management
state association. Any annual meetings I know are usually in kind of September, October, November. I was just curious for those who may be listening in those states, if you will be, or someone from your credit union will be at those.
So I'm the only one in my credit union that does this.
Okay.
We do have one coming up in Grand Rapids, and I believe it's the end of September. So Michigan does 2 conferences, a spring and a fall. So their fall conference is actually in Grand Rapids, where I am this fall. So that will be my next one. And then Ohio is one time a year in the spring. Now, I'm hoping that they do the Region 3 again. That was great. That was to have different states there. So I'm hoping that they do that in spring.
Definitely. Was that a good event for you? Did you get to meet a lot of CRNAs or that RNAs that perhaps were interested?
Yeah, I did. We met a lot of people, and it's great always to meet the other exhibitors for me and meet the directors of different college programs, because those are always good people for me to know and try to get into their senior seminars. And
absolutely.
Yeah, so, I really am targeting students because I think that's who this is most helpful for.
Gotcha.
So anytime I can get in front of students is great for me and them, I think.
Great. And Becky, we'll have your contact information in the show notes, but What's the best way to get in touch with you if someone's interested?
Yeah, my cell phone is probably the best. Yeah, you can call it.
Yeah. Okay, we'll have that number in the show notes. So we'll wrap up with kind of two different types of questions I like to ask. Becky, what's something about you that we couldn't find on Google? What's something that people would know?
They couldn't find on Google. Let's see. I love dogs.
Oh, what kind of dogs?
We have 3 dogs. We have an English Golden Retriever, and then 2 little, they're called Daisy dogs, but they're kind of a poodle Bichon mix. I love them very much.
Great.
The 19-year-old that just finished her first year of college, and the son who is rising junior this year in high school. So probably wouldn't find that online.
Good for you. Yeah, that's awesome. And this podcast is about people in the CRNA community, which you are, and successful doing what they do and spreading the word of their profession. But what I have learned is success means different things to different people. So I'd love to know, perhaps personally or professionally, what your definition of success might mean to you, Becky.
It's just being happy. It's being happy, I think, is success. It's not about money. It's just finding joy, being happy every day.
Yeah. Well, I love that. Well, thank you for sharing. And homeownership is definitely one of those things that can make us happy. So that's great. I love the parallel. Becky, thank you for being on this episode of the Money RX for CRNAs podcast.
Thank you for having me.
Thank you. I'd love to have you again sometime.
That'd be great.
This podcast is for informational and entertainment purposes only. It should not be relied upon as a basis for investment decisions. This podcast does not engage in rendering legal, financial, or other professional services.